The benefits are the easiest benefits. If it goes well, you buy a building, that area, supply and demand. That's like, think about when industrial. All of a sudden Amazon's opening warehouses. You could have bought something for 20 million, trudging along, think it's worth 21 and 22, and all of a sudden Amazon wants to be that neighborhood, and it goes through the roof. It's worth more than your business inside. Sell it for 40, 50 million. So you can have that kind of upside like crazy. There's tax benefits. All the great things exist on the good. The bad is that you lose a tenant, can't afford the payments. The bank wants to foreclose on you. So there's a lot of these risks that get involved. So that's why if you're going with a syndicator or a GP that you trust, a general partner that you trust, and they have a good track record, they know the cycles. They know that never take more than this amount of leverage, or even though I could have maybe have borrowed a little bit more, or I maybe could have taken a loan and have more of a return, but it's not as long, it's not fixed for the same period of time. Maybe I should take it. A couple of years ago, people taking floating rate deals because they said real estate's only getting better and better. Why lock in? Now those people in hindsight don't look great. Today, some people say the opposite. Don't take a long-term rate today. Rates are up. Right. Take a floating rate today because at least you get the benefits. It's going to keep going down. The other people say, no, it's going to keep going up. It's safe. You can't time these things. You can't, I tell a client, what business are you in? The stock business? Buy stocks. If you're in real estate, the loan makes sense today. Take the loan that gives you the safest thing to go do the loan. But other people have different opinions. So if you're going in the ups and downs, it's a risk with anything else, but it has one huge difference than anything else, is that it's illiquid. The pro, though, to a certain extent, if you're a big enough investor in the deal, you have a say in what we should do different for the building. Should we upgrade? Is it worth taking that risk? You invest in Microsoft, you invest in Apple, you invest in Google, you have no say. Right. So that's like some people like the fact they have a say, some people like the fact that there's actual tangible asset. At the end of the day, there's a building here. Right. And if I can figure out how to juggle the payments for the next 30 years, one day I don't have a mortgage in theory. There's another game to always borrow as much as you can. You'll see all different strokes of different folks about how they do business based on how their mentor told them how they should buy real estate.